Hello, this is Group 11. My name is Max Thetti, and today I'm going to be covering our original discussion post. And the topic that Group 11 chose was fintech and discrimination and how digital redlining impacts financial inclusion. Just as a note, this was actually built upon a case study in which this research paper was done in a rather informative way, written by social workers and their different views on finance. Next slide, please. Digital redlining. What is it? Well, digital redlining happens, for example, when internet service providers invest less money in low income and marginalized communities, which then leaves these communities with slow and unreliable broadband or just no broadband at all, which redlines the communities often pay just as much as wealthier communities for these slower speeds. And exactly how does this fit into fintech? Well, for example, in internet speeds and mobile and online banking, you have situations where people can't have access to financial capital. Hence, there is a marginalized community that doesn't have access to these opportunities. Next slide, please. Well, what are some of the problems we're addressing in today's original discussion post? Rural communities, for example, majority of them don't have access to broadband or these high-speed internet or cell services. And digital tech is required in our new times for online and mobile banking. The other problem that we see in the state of fintech that is not regulated as the same as the terms in brick and mortar banks. And then for one reference later with the CRA, you'll notice that fintechs are also unregulated in this space, but they're looking to find a means to regulate these fintech companies by associating them with some of the compliance and regulatory standards. And another problem that we're also seeing in financial services space is that in the last decade, we're having a majority of bank closures in these rural communities, and it'll continue, and which will then increase the reliance upon online and mobile banking. And with these rural communities not having those accesses, then in turn marginalizes them and doesn't allow them to have the inclusion and access to the financial capital that for those that are looking to get loans. And now I'm going to be handing this off to my colleague Peter to then discuss our next portion of our discussion.
Yes, I would like to discuss the methods that these social workers basically used for the three particular data, fintech, and rural communities that they were trying to evaluate. The data came actually from four different sources. One of them was the Business Analyst Market Potential source, the Federal Deposit of Insurance Corporation, the FDIC, the National Credit Union Association, also known as the NCUA, and then the American Census Bureau Community Survey. They were using, by a combination of these three methods, they were using a particular zip code data, also known as the ZCTAs, also known as the U.S. Census Bureau zip code tabulation areas. There are some limitations associated with that, because some of the geographic space is typically larger than the smaller geographic units, meaning that it can only be a limited proxies for certain communities and would probably understate some of the extent of the inequalities. But since that was one of the things, of course, that they would have to use in order to make at least some idea of what these marginalized populations are within those particular areas, zip codes were the best opportunity that they had. When it comes to fintech, they were actually measuring the particular propensity, or in this case the representation of the total adult population with high-speed internet access, smartphones, and of use online and mobile banking opportunities. And on top of it, they also wanted to look whether these particular populations were in sub-rural cities or rural areas. And they decided that within their sample, there 19% of the U.S. population is actually living in those rural areas where the particular access is, of course, a rather minimal. Turns out that, of course, the measurement that they were using for rural, this is based on the Census Bureau, is approximately populations of about 50,000 or certain population clusters of about 2,500 to 50,000 people. And it turns out that 50% of the total sample actually lives in those particular rural areas, and that comprised the entire, kind of analytic sample that they were using. In order to evaluate certain relationships between fintech, of course, and kind of racial and poverty standards, they also use data from the Census Bureau, also known as community services, which gives you a 5-year estimate of certain poverty standards within certain rural areas, and then sort of racial demographics. Then to determine the financial service and the financial services accessibility, they were looking at density, as was already alluded by Max earlier. A lot of banks are closing within those rural areas, which makes it even more difficult for certain people to participate in fintech. And then in order to get an idea of what the community actually was in based of the overall demographics, they were basically measuring the population percentage of people with a bachelor's degree, whether they were married, age 65 or older, and whether they were, of course, involved with certain unemployment, or whether they were underemployed. Then if you look at the overall sample analysis, then on the left-hand side of the slides, you can see the racial compositions, where, you can see 88% of these people were white, 5% was Latinx, and then 5% Black, 1% Asian, and 3% American Indian or natives. And then the analysis plan that they were using was sort of a linear relationship between the fintech accessibility, as was measured in the previous slides, and then, of course, the rural and the demographic information by using what is called an OLS regression, on ordinary least squares, in order to find the specific relationships between those types of variables. I will continue to go forward with this presentation by handing it over to Brendan, who will talk about the results.
Right. So what was the outcome of the study? Well, it found that, generally speaking, poorer rural communities of color were disproportionately impacted by digital redlining. These results can be broken down into 4 major categories: high-speed internet access, smartphone ownership, online banking, and mobile banking. Next slide, please. So for high-speed internet access, among the rural zip codes included in the study, the area that had the highest density Black population had comparatively lower rates of high-speed internet adoption. Education level and net worth were also strongly correlated with rural zip code fintech rates. For smartphone ownership, in the study, the poorer rural areas with the highest percentage of non-white population had the highest rates of smartphone ownership, whereas areas with the highest percentage of a white population was negatively associated with smartphone adoption rates. Age and education were a big factor with smartphone ownership. As the age of the population over 65 increased, there was a sharp decrease in the rate of smartphone adoption. Next slide, please. So for online banking, among the high poverty rural areas, the rate of online banking was highest among zip codes with a predominantly Asian population, and lowest among zip codes with a mostly Black population. Education level and the density of bank branches in the area was also strongly correlated with the rates of online banking in these communities. For mobile banking, rural communities with higher percentages of white, Latinx, and Asian populations were associated with a higher rate of online banking, whereas higher percentages of Black and Native American populations were associated with lower rates. Again, age and density of local bank branches was also negatively associated with the rates of mobile banking, suggesting that mobile banking rates decreased with the availability of brick and mortar branches. Next slide, please. So I'll now pass it to my colleague Bunnery to talk about the implications of this study.
Thank you. So implications, what can be done? The digital divide exists as the gap between people who have access to digital and financial technologies and the lack thereof in rural communities continue to exist. These gaps of connectivity reflect the differences in wealth and education. To bridge the digital divide, it is essential to expand access to digital and financial technologies in rural communities. Next slide, please. For the policy implications, what is being done to close the divide? The community investment. There is an opportunity to benefit the community and financial institutions. Banks have an interest in expanding so that they can continue to expand online access and mobile banking. So in 2016, the Community Reinvestment Act revisions encourages financial institutions to help meet the credit needs of the communities, including low and moderate income neighborhoods, by helping banks finance access to internet projects. Local initiatives includes, so there's state funding for grants, programs, and tax incentives, enhancing existing incentives and providing subsidies to private companies for expansion. For public utility, we want to talk about net neutrality. Net neutrality is the principle that an internet service provider has to provide access to all sites, content, and applications at the same speed under the same conditions without blocking or giving preferences to any content. It is determined that it is not considered a public utility. Next slide, please. I would like to turn this over to my colleague for the discussion portion.
Thank you, Bunnery. So now I want to bring it back to all of you and finding the means to discuss whether fintech and discrimination do align, and if you do see there is a digital redlining in the space. So I'd like to ask you a few questions. Next slide, please. Should this digital discrimination be treated as a civil rights violation? Would you agree or disagree? And the last question, has the Community Reinvestment Act helped expand digital technology? Looking forward to everyone's answers. This concludes Group 11's original discussion post in FinTech and Discrimination